There's starting to be some pockets of bearishness as well. If you look at the American Association of Individual Investors, they've started getting a little bit more bearish in those surveys. So
Yeah.
we're starting to see that.
I'm not expecting it. I think the odds are very low.
But we're in the third year of a bull market. Normally, third year of bull markets tend to underperform.
All right, guys, hello and welcome. In this video, we're joined today by my good friend, Charlie Burton of charlieburtontrading.com. And we're going to talk about the stock market. Specifically, after its most recent pullback correction that the stock market has had, we're going to ask the potential for the stock market to reach what some people out there think is a target of 7,000 on the S&P. What does Charlie think about that? Could the S&P reach 7,000 this year in 2025? I'll share you my views about it, whether I have doubts, and Charlie will give his views on that as well. Should be quite interesting. So overall, we're going to dig into what's happened recently with the stock markets, the volatility we're seeing in the stock markets, and also explore the view and ask the question whether there's potential for more upside in the stock market here this year in 2025, or is there much more risk ahead for the markets? All right, guys, join us. All right, guys, welcome back. Charlie, how are you doing, by the way? You well?
Thanks ever so much, as always, having me on your channel. Apologies for having to sit here with my my tissues here this afternoon. Man flu equals a snivel for men.
Yeah, I think you said to me you went to central London, and were you commuting? Is that why? Charlie, let's go on to the main thing I want to talk about here. So recently, we've seen a lot of volatility in the markets, the stock markets. We've seen pullbacks in the stock market, some key levels. And indeed, we saw a warning given by Jason Geppert of Sentiment Trader, which I mentioned in the previous video. I think it's worth mentioning again.
According to a recent article from Barron's, they quote Jason Geppert. And Jason Geppert, who by the way is a fantastic analyst, he says something very interesting. He says the easy ride for the markets is coming to an end. In fact, in this particular article, Jason says the historically good run for stocks may be coming to an end. Why? Because of something called the Sharpe ratio. You see, guys, the Sharpe ratio is a measure of return to risk. In other words, how much you make for every dollar you risk in the stock market. Well, guys, Jason Geppert is saying and warning us that the Sharpe ratio has peaked and is now beginning to roll over in the opposite direction. And what does that mean? Jason says that historically, whenever the Sharpe ratio has peaked and rolling over, this means firstly the easy ride for the stock markets is coming to an end, but also we could see a lot more volatility, a lot more ups and downs in the markets. In other words, the easy period where you could just buy the dip willy-nilly on any drop in the markets may be coming to an end. We have to get used to a lot more volatility, perhaps a lot more ups and downs, and it does mean we have to become a lot more cautious about the stock markets.
I guess the question becomes, what is the potential, what is the probability for the S&P this year in 2025 to reach 7,000? I have my views about it. I'll share that, but I want to first hear yours first.
Yeah, I quite like that chart that you've just shown. And it sort of aligns with some of the things that I've been looking at. I think from a sentiment perspective, coming into the end of the year, end of last year and into early 2025 was very, very bullish overall. And there's still pockets of bullishness. There's starting to be some pockets of bearishness as well. If you look at the American Association of Individual Investors, they've started getting a little bit more bearish in those surveys. So yeah, we're starting to see that. I think it's an interesting time at the moment. Do I think 7,000? Anything's possible, but we're in the third year of a bull market. Normally, third year of bull markets tend to underperform. It doesn't mean to say they have to go down, but underperform. And as you've just said, maybe more moderate returns or just choppy price behavior. So I must admit, I'm more in that camp at this stage in the year. I think when everyone's been optimistic, what with the new administration coming in, oh, it's going to be bullish for stocks. When everyone's thinking the same thing, then normally you have to at least be a bit more cautious towards that. So I'm in the cautious camp.
I think near the election last year, when Trump was elected, when the markets began to rally higher, we saw a lot of mentions on social media about 7,000 on S&P. Yeah, and that got me very cautious, and indeed it was a warning sign. So I agree with you. No, I don't think it's likely at all for the S&P to reach 7,000 this year in 2025. And in fact, when I spoke to my friend Manuel Bly of the Dow Theory, dowtheory.com, he mentioned the same thing. He said that it's highly unlikely for the S&P to go to 7,000 without a significant drop. I agree with Manuel, and I agree with you as well. I think that for the S&P to go to 7,000, we would have to first see a significant decline. We have to see a significant correction. I don't think that the S&P is going to go to 7,000 this year. I think it's highly unlikely. I think we could potentially see a higher high, likely in the next several months, perhaps, maybe in the spring or summer of this year, but I'm not saying 7,000. So I'm seeing the likelihood of a top in the market before a significant drop being much higher. Is it your view that we're going to see a bit more risk? We're seeing more risk in the next several weeks as we head towards the March period in spring?
Yeah, I think you can't. Sentiment alone is not enough. Sentiment is one part of the ingredient. So when you're making some form of high, as we've got into the end of last year and into the beginning of 25. But there's much more to it. I think from a breadth perspective as well, my breadth measures have deteriorated
Right.
since the end of last year. So as we came into December, the percentage of stocks trading above their 50-day moving averages, trading above their 200-day moving averages was decreasing. So there's fewer percentage of stocks trading above their respective key moving averages, and yet the stock market was making new high, and yet all that's telling us is that fewer stocks were participating. So what's happened is we've seen that greater concentration of money going into what? Magnificent Seven, fewer stocks
Yes.
leading, and that can happen for a while where you do have lower market breadth, but when it becomes a bit more of an extreme, it can actually be a bit of a warning sign as well. So there are other things that are going on: breadth, sentiment, valuations are high,
Yes.
and expectations. So you put it all together, and it's not that stocks can't go higher, as you've just said about maybe into the spring and summer, but at the same time, you should be a little bit more cautious. I certainly am at this stage. Yeah.
Yeah. By the way, I should just qualify what I said earlier, that I think the potential for a higher high or a continuation of the bull market for the stock market is there, provided the S&P and the Dow remain above key support. As long as the S&P stays above key support. Again, we've covered the key support levels in the member video, so go ahead and watch that. But yeah, I think as long as we remain above key structural support levels, there's still potential for bulls to regain control at some point and push it to further highs in the next several months. But if that support gets broken, then no, then that would have to change our mind and become more bearish. But we'll see what happens. But just to put this in perspective and just wrap up this video, to answer the question we asked earlier, even if the market were to see higher highs sometime this year, both Charlie and I think agree that the probability of the S&P going to 7,000 is much lower. I'm not expecting it. I think the odds are very low for the S&P to go to 7,000. So I don't think it's likely at all. I actually think that we could see a top this year, or potentially by the end of this year, we might see a top in the stock market. We'll do that another time. And again, we've covered that in the member video as well. By the way, guys, do check out Charlie Burton's new trading signal service, which I mentioned earlier as well. It's called Smart Signals. Charlie will give you more information about it in just a few moments, but make sure you go ahead and check it out for free on that link you see right there. It's also in the description as well. That's bit.ly/Charlie Burton. It's a short link. When you go on that link, go ahead and check it out. Take it for a test drive. It's 7 days free trial, no cards required whatsoever, no payment required. 7 days free trial of his Smart Signal service. Charlie, give us some information about what's involved in your new trading signal service.
Well, it was 7 years in the making with my developer. It's artificial intelligence based, statistically based trading signals. So the AI has done over 1 billion computations to come up with relatively high win rate trading strategies across multiple asset classes: FX, crypto, gold, stock market indices, and it just produces trade signals, all fully automated with charts saying with the exact risk per trade. You've got little risk calculators, where to put your stop loss, the entry, the targets, and the probability of outcome per trade as well. So it's a very cool piece of software, and you've got full training videos. They're all little 2-minute videos on there, just showing people how to actually use the signals and how to actually go about placing the trades and using calculators and all that sort of stuff. Very, very cool. Plus you've got me behind the scenes monitoring the systems, and of course, as different markets might come in, which might all of a sudden go into big bullish trends, I'm going to want to switch on one of the systems that is geared for bullish trends in that given market. So I'm always going to be monitoring it behind the scenes as well. So there's full support. It's just nice because people can trial it, no risk, don't have to put a credit card or anything in, just give it a go and see if it works around you, because most people, or many people these days, are lacking in time. They don't have the same sort of time to analyze the markets that I have, and they just want to be able to take a couple of trade signals perhaps per day over a course of a week, and then get on with their days and know that they've got statistical probability backed trades. So that's really what it is.
I'm assuming it covers crypto as well, Bitcoin and crypto as well.
Yeah. In fact, it was just spitting out some trades on Saturday on Bitcoin and Ethereum. So yes, it does cover crypto, forex, stock indices. So the broad spectrum, gold, for example, as well, commodities. So yeah, broad spectrum of markets that it covers. And so yeah.
Sure. So guys, once again, check out the free 7-day trial link. That's right there, bit.ly/Charlie Burton. Go ahead on that link and subscribe to Charlie Burton's Smart Signal service. Again, for free for 7 days. As I mentioned before, Charlie Burton is one of the few people out there I trust when it comes to trading analysis. So again, I highly recommend you try out and check out Charlie's Smart Signal service. Thank you very much, Charlie. Much appreciated.
Thanks, Alessio. Yep, thanks for having me on.